Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, March 26th. Just one economic news release today, and that's the durable goods orders for the month of February. So we had a negative back in January of 1.3, and the forecast is supposed to improve, but basically at zero, and we exceeded those expectations. So good news there. It is a high impact report here, so those are obviously good news that we go from negative to a positive and exceeding the expectations. So good news there. So we're going to jump over to the headline news here, and stock market actually was up earlier this morning, but as since later on, it actually made a little bit of change. It's a little bit mixed as some of the tech stocks started going down. Part of it is earnings reports coming out, some maneuverings on the earnings side of things, but also other ones has to do with the hopes of stimulus in the EU and China. I guess there's some investors out there that there's been speculation that maybe the central banks in those respective countries or regions may seek to create some more stimulus in those regions to fight off low inflation and to stimulate their economy a bit more. Also earlier today, or actually yesterday after the stock market had closed, Fed member Bullard had made some comments yesterday saying that he thinks unemployment will be below 6% in 2014. He thinks we're on our way. And then he basically made a comment about the Fed funds rate will be at normal rate. He's not specifying where it's going to be at, but he thinks it's going to be at normal rates in 2014, 15, and 16 and stuff. So it's kind of what his comments were. So take it as you will, I guess. Whereas yesterday we had Placer kind of made where he thought the Fed funds would be, and his forecast for 15 and 16. Let's go ahead and take a look at the bond market. And today is actually kind of a good day, primarily because if you notice, for almost 4 days straight there, we were kind of starting the day off lower than where we left off, and then we had some improvement. And today we're actually starting off a little bit higher, and we were up higher. We touched the 10-day moving average and pulled back since. We were actually up just over 104. So we're kind of trending a bit higher, which is obviously a good sign for us, which means better interest rates. Yesterday we stopped at 103.84. We had 3 days in a row where the market stopped at 103.84. We're at 103.97 at this moment, which is enough for a price improvement for the interest rates today. So a good sign right there for us. We'll see if it kind of continues. We do have more news this week, as we do have the final revision for the GDP numbers for the fourth quarter. And we got consumer confidence coming out. And so let's be on alert. But today is obviously a good day for interest rates. All right, folks. Thanks for watching. I hope you guys have a wonderful day, and we'll look forward to seeing you guys tomorrow.